Global equity markets in general had a positive day of trading on Wednesday. Both the Australian market and the New Zealand market were up yesterday, and this is despite news of the Queensland floodings dominating the headlines back here. The US and UK markets were also able to move up overnight, and this is due to the fact that a positive bond auction out of Portugal really has supported investor confidence. In the currency markets, both the New Zealand dollar and Australian dollar drifted higher against the US overnight. The Australian dollar was down as low as 98 US cents yesterday. However, overnight was bid up to around 99.40 US. The New Zealand dollar drifted up also with the Australian dollar. All eyes throughout the global investment community were on Portugal yesterday for a very important bond sale. The bond sale was important for the fact that many people had anticipated that the cost of the government's borrowing in Portugal would spiral out of control. Despite this, the bond auction was better supported than many people had anticipated. The cost of debt remains below the important 7% for the Portuguese government, and this means that the cost of borrowing has definitely not spiraled out of control at this point. Despite this positive auction, many people are questioning the fact whether Portugal can continue to go on without seeking further assistance from either the International Monetary Fund or the European Union. In the headlines as well as Spain and Italy, many investors are still predicting that these countries could be the next to seek monetary assistance from the Central European Union. Ireland and Greece already received monetary assistance in 2010, and it is likely that the next candidate will be Portugal. Overnight, corn and soybean prices hit a 30-month high on the Chicago Mercantile Exchange. This is due to the fact that flooding in Australia has closed a major grain exporting port there. This closure of this port has come at a time where Argentina has significantly cut grain production this year due to a substantial dry caused by the summer hot conditions over there. And this has also coincided with the fact that the US government has also cut inventory of grains within their domestic market currently. The high grain prices do have somewhat of a flow-on effect to high international food prices currently. China, India and Brazil are all battling double-digit food price inflation at present. This is somewhat negative to some of their lower socio-economic consumers in those countries. Despite this, the high grain prices have really supported beef and hog prices in US futures trading, and this has had a positive flow-on effect to the New Zealand market. Lamb prices in New Zealand do remain above $6 a kilo, and this is likely to continue for the remainder of the season as both the tight domestic supply and high international prices continue to help this sector out.